Wall Street has the reputation for being a boys' club, but women may be the street's true winners. Studies show that women are more successful investors than men. These studies are the basis of a new book called Warren Buffett Invests Like a Girl by Motley Fool editor LouAnn Lofton. LouAnn, welcome to MoneyWatch, and let me start by saying, this title's sort of like an insult. I don't throw like a girl. What's up with this?
No, we're taking that back. It shouldn't be an insult. Doing something like a girl should not be an insult. And when it comes to investing, studies show women are just better at it. We're better at controlling our emotions, which I know sounds controversial, but men actually tend to trade too much. They take too much risk. They let themselves get caught up in the game and the gamble of investing. And women, it's just, the results are clear. We just make better investors.
And how does Mr. Buffett feel about the use of his name and, you know, kind of throwing like a girl thing here? How does he feel about that?
Yeah, I've had so many people ask me that when I was writing the book, you know, does he know what you're saying about him? And he did. He embraced the book. He thought it was very funny. And I even had a chance at the Berkshire Hathaway annual meeting to ask him point blank, Mr. Buffett, do you think you invest like a girl? And he said he probably pled guilty.
Wow, very nice. So you're like BFF now. I can't even believe this.
Totally.
That's so awesome. Now, Buffett has said, let me read this quote, the most important quality for an investor is temperament, not intellect. And that's really at the heart of the book, right? What is it about a woman's temperament that is making her a better investor than a man?
One thing that was interesting to me when I started looking at these studies back in the summer of 2007 is that it just looked like women were naturally suited to be great long-term investors, and it bared out in the results as well. I mean, we're more patient, we're more willing to commit, we think longer term, we don't trade as much, we're more risk averse naturally, and we don't tend to be as confident as men, and certainly not overconfident as men when it comes to investing. The overconfidence and the risk can sound kind of like a bad thing, like you're saying, we don't believe in ourselves, we don't take as much risk, but actually when it comes to investing, that's good because that means we do more research, we think it through more, we're less likely to trade on hot stock tips. And when you look at the results of all these studies, it's clear. You know, men panicked more than women and sold at the bottom of the market in fall 2008. And the results hold for professional female investors as well. One thing I just saw recently said that female fund managers outperform male fund managers by 55% over the last 9 years. So
That's
I think
great.
it's time for, girl up. Let's get
it.
out there, start
I like
investing.
That. So one of the things that's also interesting is that when I was an investment advisor, I also found that women were a little more cynical, that they didn't necessarily believe that you could beat the market. And in a lot of ways, I thought that was quite brilliant because you're not trying to attain this thing that's so hard to do anyway.
Right, exactly. I mean, yeah, the studies show women just tend to be more realistic. We don't get all caught up in the hype and the hoopla and the optimism. And, optimism's a great trait in many aspects of your life, but when it comes to investing, it can make you not question what you're doing enough. It can make you accept what other people say. It can make you trade and buy stocks you don't fully understand. I think women just tend to have a clearer eye, as does Mr. Buffett, when it comes to investing.
So talk about Mr. Buffett for a second and maybe some of the qualities that you think that he has as an investor that either women can learn from or that any investor can learn from that maybe he does share with a woman in the way he approaches long-term investing.
Well, what's interesting when you look at a guy like Buffett, what you really see is the opposite of what we've come to expect from Wall Street. He buys companies, he holds on forever, and he only invests in things he really understands. Think of the companies we associate with Buffett, Coca-Cola, Dairy Queen, Geico, Washington Post, Fruit of the Loom underwear. These are things we all know and understand and can get our heads around, and he will not buy something unless he really understands it. And that's a trait that we see with women as well. They really do their research, and once they get into a stock, they hold on. They're in it for the long term, just like Buffett is.
Now, talk a little bit about the stock part, because, in so much research, we understand that really a portfolio of index funds is really the best possible strategy that investors can use. But you're saying, no, you can throw some individual stocks in there. Now, how do you jibe that with the research?
The index fund is a great place to start. I have an index fund. I think everybody should have an index fund. But then I think that you can, if you do enough research, and if you hold on, if you invest with this Buffett-like mentality of not viewing investing as a game, not trading on hot stock tips, I think it is possible over the long term to add stocks in with your index and build a very diversified portfolio. And it's not easy work. It's going to take some reading and some research. People have got to learn before they get into this. That's really important. Buffett would never jump in without doing his research. But once you do all that, I mean, I think it's great for people. It can become fun almost to read about these companies and follow them and know that you're an owner of them.
But why do it? I mean, to what end, really? I mean, yes, you could add some incremental value, but since we know that pretty much active mutual fund managers who have the biggest, deepest research teams around can't beat the index, why do it at all?
Well, I think if you're looking at an individual investor, you're not held to the standards. I mean, this is a great thing for the individual investor. In a mutual fund, you're driven by inflows and outflows and when people want their money, and they're held to things. I mean, they have to do business a certain way that makes it difficult for them. I think when you have an individual, I think there is the chance for you long term to really find stocks that can be winners for you.
And just before we wrap up, tell me, is there something we can learn from men in the way that they do approach investing?
Yes, I have to say yes.
Oh, God, I must admit, there is one thing.
Yeah, well, you know, the thing that will kill men in the long term is this, is wanting to take action, wanting to do something. I have to do something. I have to be doing something all the time. And women, you know, I think we need to be doing something more of the time. I think we need to start doing something. I'm not saying we need to start trading frantically and investing like men do without really thinking it through or taking a lot of risk. But I do think that it's really important for us to take those steps to actually get into investing and start doing it today. Don't be intimidated, don't be scared, don't let people tell you can't do it, because you absolutely can.
Right, so just basically the action step is take control of your financial life.
Yes, absolutely.
Excellent.
Absolutely.
LouAnn Lofton, thank you so much for joining us.
Thank you.
And thanks for watching.